Observe Tim. Tim is smart, very smart. Tim has a PhD in physics. Tim can solve a Rubik's Cube in 14 seconds. Tim understands quantum mechanics. Tim thinks, I am a genius. The stock market is just numbers. I will crush it. Now, observe Bob. Bob is simple. Bob thinks quantum mechanics is a brand of dishwasher. Bob eats crayons sometimes. Tim and Bob both open trading accounts on the same day. 1 year later, Tim is broke, and Bob is shopping for a yacht. Why?
It makes no sense. I calculated the Fibonacci retracement relative to the GDP of Switzerland. My analysis was perfect. The market is irrational. It's wrong.
Tim is suffering from the intelligence trap. In the real world, being smart gives you an edge. In medicine, engineering, law, if you study more, you win more. But in trading, your high IQ is not an asset. It is a liability. Your brain is a pattern recognition machine, and the market is a machine designed to fake patterns to steal your money. Let's look at how smart Tim trades. Tim opens his chart. Tim does not see a simple price. Tim sees a puzzle. Tim thinks he can solve the market. He adds the RSI indicator, then the MACD, then the Bollinger Bands, then the Ichimoku cloud. His chart looks like a laser show at a rave.
Okay, the RSI is overbought, but the MACD is crossing over. However, the geopolitical tension suggests a bearish bias. But wait, the 200 EMA is sloping up by 3 degrees.
Tim is stuck. This is called analysis paralysis. Smart people hate uncertainty. They crave control. They think if they add one more variable, they can eliminate the risk. So Tim waits for the perfect setup. He waits for 10 indicators to align. Finally, they align.
Eureka! It is mathematically impossible for price to go down. All systems go, full margin.
Tim buys. Price immediately drops. Tim is shocked. In Tim's world, 2 plus 2 equals 4. In the market, 2 plus 2 equals fish. The market does not care about your PhD. High above, Mr. Bank is laughing.
I love the smart ones. They are so arrogant.
They think they know the future. Because they think they are right, they refuse to sell. They hold the bag. Intelligence is just a bigger container for ego. Now, let's look at dumb Bob. Bob opens the chart. Bob has one rule. If price breaks the green line, I buy. That's it. No PhD, no calculus. Bob sees price break the green line. Bob buys. Does Bob know what the Fed is doing? No. Does Bob know what the RSI is? No. Bob buys because his rule said buy. The price goes up. Then the price turns around and goes down. It hits Bob's red line. Bob's rule says, if price hits red line, sell.
Red line. I sell. Bye-bye money. Next trade.
Bob takes a small loss. Bob does not have an existential crisis. Bob does not scream at the screen. Bob does not think he is stupid. Bob just thinks, rule said sell, I sold. Bob is too dumb to have an ego, and that is his superpower. Pause. Before we explain why you should lower your IQ, legal words. Trading is risky. Both Tim and Bob can lose money if they have bad rules. This is education, not financial advice. Do not eat crayons like Bob. Resume. So, why do smart people fail? Smart people are wired to find causality. If the car breaks down, there is a reason. If the bridge falls, there is a math error. So when smart Tim loses a trade, he goes looking for the reason.
Why did it drop? Was it the news? Was it the algorithm? Did I miss a divergence? I need to study more. I need to fix the system.
Tim tweaks his system. He changes the rules. He curve fits his strategy to the past. He makes his system perfect for yesterday. But trading is not engineering. Trading is poker. Trading is probabilities. Sometimes you do everything right and you still lose. Smart people cannot handle this. They take a loss personally. To them, a loss means I made a mistake. To To a professional, a loss means the coin flipped tails. There is a concept called the Dunning-Kruger effect, but in trading it is reversed. The more you think you know, the worse you perform. Retail traders overcomplicate. Institutional traders simplify. Smart Tim thinks he needs to predict the next candle. Mr. Bank knows he just needs to manage risk. Here is the uncomfortable truth. To make money in trading, you must become dumb by choice. You must turn off your why brain and turn on your do brain. We call this systematic trading.
I hire PhDs. I put them in the back room to build models.
So, how do you fix this? How do you stop being Smart Tim? You need to lobotomize your trading. Here is the 3-step process to systematic stupidity. Step 1. Remove the noise. Look at your chart. Do you have more than 2 indicators? Delete them. Are you watching the 1-minute, 5-minute, 15-minute, and 4-hour charts all at once? Stop. Pick one time frame. Pick one structure. If you cannot explain your trade to a 5-year-old, you are too smart for your own good.
But if I delete the stochastic oscillator, how will I know the momentum of the third wave?
You won't, Tim, and it doesn't matter. Price goes up or down. That's it. Focus on price. Price is the only truth. Everything else is an opinion. Step 2. Binary decision making. Smart people love gray areas. I'll buy, but only if it feels right. I'll sell, but I'll wait for the candle to close a specific way. This is subjective. This breeds emotion. You need binary rules. Yes or no. Is price at the level? Yes. Did it sweep liquidity? Yes. Did it reclaim? Yes. Then click the button. Do not think, do not hesitate. Be like Bob.
Button click, banana get.
Step 3. Embrace being wrong. Smart people try to avoid being wrong. Traders get paid to manage being wrong. You have to accept that you are not special. You are not a prophet. You are a casino dealer. The dealer doesn't care if the player wins a hand. The dealer just deals. Deal the cards, execute the edge, accept the outcome. Let's rerun the simulation. Tim deletes his indicators. Tim stops reading news. Tim creates a simple plan. Buy the dip in an uptrend. Tim waits. He feels the urge to analyze. He suppresses it. He sees the setup. His brain says, but what if the Fed raises rates? Tim says,
Shut up, brain. Follow the rule.
Tim clicks buy. Tim loses. His brain says, you idiot, you missed a sign. Tim says,
No, I followed the rule. Good trade, bad outcome. Next.
Tim takes the next trade. Win. Tim takes the next. Win. Tim stops trying to be a genius. Tim starts being a robot. And slowly, Tim's account starts to grow. The market is the only place where I don't know is a profitable strategy. If you know exactly what is going to happen, you are hallucinating. If you admit you know nothing, but you follow your rules anyway, you are a professional. Being smart helps you build the system. Being dumb helps you execute it. Be smart on the weekend. Be dumb when the market is open. If you want to join the tribe of profitably dumb traders, subscribe. Mr. Bank prefers it when you try to be smart.